Well, if you're trying to figure out what's going on with mortgage rates, you came to the right channel because we focus here on these things every day. I do a report twice a day to inform you guys what's going on with these things over here and the whys behind it. Today's video we're going to talk about is a lot of the details that fill in the blanks of what the Federal Reserve monitors. Now, I know the Federal Reserve, they still control a lot of things, but unfortunately, they don't really control rates right now because the markets are just completely focused on tariffs. You can see right through here, Treasury yields slide as OECD slashes U.S. growth rate outlooks on tariff uncertainty. So we have that hitting the news today, and we also had the job openings and labor transfers hitting the news today, as well as factory orders. So when you have to focus in on what the economy looks like, you have to look at those items right through here. This is what the Federal Reserve monitors, and yes, the Federal Reserve still has a role in interest rates. So I want to focus in on today is the economic news that just hit the presses. That is job openings and labor transfers. Let's get over to Rick Santelli over at CNBC to explain what's going on with these. Now, I was trying to do this live right when he did this report because we were way up. We were up about 14 ticks on the MBS market, and I thought this would be a major move up or down, and it was. Unfortunately, it was on the downside. So let's get over to Rick to see what this news looks like for today and how it's affecting the markets. When he's done, I'll show you instant market reactions, not only with interest rates, but also with equities. So hang tight. Here's Rick.
First, though, let's get some jolts and factory orders with Rick Santelli. Hey, Rick.
Hi, Carl. Indeed, on this jobs week, job opening labor turnover for April comes in at 7,391,000, above the 7.1 million estimates, and sequentially above slightly revised 7.2 million in the rearview mirror. That is the best since just February because we reversed that March downturn.
Okay, so now here's where the bad news starts on the manufacturing side. A lot of numbers came in today, and they were dismal, I'll say it that way. So now the concern that probably the markets are going to have with this, as well as everybody else, is if we have a complete downturn in the jobs market because of manufacturing coming down, what's the Federal Reserve's actions going to do? Because they have two mandates. Their mandates are to keep full employment through the economy is keep inflation in check, aka prices. So they have to keep that mandate on job openings and keeping the job market at full employment. So let's now get over to the manufacturing or factory orders that Rick has to give us. Rick, give us the bad news, buddy.
Now let's look at factory orders. Minus 3.2 expected, minus 3.7 arrives. Weakest since January of last year, and a negative revision from 4.3 to 3.4 for previous month. Take out transportation, still negative, but a bit less negative, down 0.5%. We're expecting a positive number, down 0.5%, weakest since May of 24. Now, these are durable goods coming up. These are final reads that replace mid-month read. Minus 6.3 remains at minus 6.3. That's the weakest going back to Jan of last year. If we look at durable goods ex transportation, a dramatic improvement, up 0.2 equals our last look, and that would be the best since it was up 0.4 in February of this year. If we look at capital good orders, non-defense excerpt, proxy for capital spending, deteriorated by 0.2% from minus 1.3 to minus 1.5, making it the weakest going back to February of 23, Feb of 23. And finally, if we reverse from orders to shipments, it remains at minus 0.1%. Right now, we're looking at 392 in a 2-year, and after all the data, we oscillated a bit in terms of price, but we ended up at the same place. That is down 2 basis points. Long end down much more dramatically. Hence, we're looking at some steepening of the curve. 10 years at 441, down a 6 basis points. Carl, back to you.
It's Dan, Rick. Sorry about that. Okay, so here's what happened. Here was the instant reactions today. So the market opened up. It was rallying. It was up about 14 ticks right here, and then that news came out, and it was down, 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 and away from there. So that's not great news that we had out today. But if you look into it, manufacturing is coming way down. So now would the Fed look at it and say, is it time to cut? Well, if you start looking at the U.S. economy, it's not as dismal as is expected. The Atlanta Fed came out yesterday, and they said the economy is going to grow this year at a 4.6 pace. It's much stronger than the last reading on Q1 of 2025 is a negative 0.2. So this is going to play a role, and this also helps, believe it or not, as the GDP rises, it offsets our our deficit, but I'm still a deficit hater, I guess is the best way to put that, because they still need to start cutting a lot of the benefits. One good piece of that puzzle, though, is if you are on Social Security and you go in default on your student loans, they're not going to garnish your student your Social Security and things like that. I'm a proponent for that, folks. So I'm not here to hurt anybody. I just you know how I feel on the deficit and things like that. So that's what we focus in on right through there. Bond yields right through here. The OECD slashes the U.S. growth rate. They slashed it to a 1.5, but they still have it as a positive. So that's good news right through there. They're saying the economy is going to grow at 1.6% in 2025 and 1.5% in 2026. So that's still a positive number through there. If we go over to the equity markets, basically it's just on hold. Everybody's on hold. Why? They're just waiting those trade deals with foreign countries as well as China. How that whole debacle is going to go, we'll just continue to watch that. Let's get over to oil, because you guys know how I feel on oil. That's up to 63. I don't want that to get to 65 because that gets to be more and more inflationary. Cryptocurrencies, what's it doing? Woo! It's up $2,000 to 106. Loving it there. Okay, we go over to the bond markets. The bond market is only up one tick right now, so that means mortgage rates are going to be flat as a pancake. Now, what we have coming in next 2 days. On Thursday, we have initial jobless claims. That's going to give us the numbers from the government. And then on Friday, we're getting average hours worked and more non-farm payroll numbers and the official unemployment rate to basically fill in the rest of the blanks through here with the Federal Reserve monitors. So come back every day to figure out how this is going and instant market reactions to that and more. One public service announcement I need to make before you guys go out there and buy a car or buy a house and have the bank run your credit report. Before you do that, I need you to go to optoutprescreen.com. What this does is it stops your financial data from being sold. Okay, did you sign up for that do not call list to make sure that people don't call you just on random because they bought your phone number? Well, this thing works the same way. Did you know when you have your credit pulled, if you're looking for a car loan or a mortgage, that data is going to be sold. So if you go to optoutprescreen.com, you can get on that list so they don't sell your data. Now, on to me, what I do and how do I do things. Well, my name is Dan Frio. Like I said, I'm actually a federally licensed mortgage loan officer, licensed in all 50 states as well as Puerto Rico. Our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, the bank I work at, it's a federal bank, is actually set up with 33 other lenders. And the reason why they did it is for you guys. It's to help us maneuver or manage with you, because when you're out there, what are you looking to do? Most people say, I need 3 or 4 different quotes. Well, I wonder if I can get you 33. You can do that right through here. So the rateupdate.com, that's our website. If you want to put in your application, it is right here on the top right corner, right through there. You can schedule an appointment with me by clicking that button there. You can schedule a consultation call right through here. But check out some of these videos and other tools we have down through here to help you maneuver home ownership, or maybe looking to refinance that home in 2025. If you're looking to do that and you keep missing when rates drop, well, go to the RateWatch tool. This is for homeowners, allowing you to let me track mortgage rates for you. And then there's 6 other videos down here to help you guys maneuver some certain areas, but we have over 3,000 videos on our YouTube channel. So check those out. And we also have live events each week to help you guys understand the stock market, real estate, and other things like that. So thanks for watching, folks. God bless. I'll be back here later this afternoon with Stock Talk Tuesday, and then the closing bell to let you know how all this mess ends for the day. Thanks for watching, folks. God bless. Have a fantastic afternoon. See you later. Bye-bye.